Ladies and gentlemen, it's time that I reveal to you that I'm actually a massive investor in individual stocks. I've actually bought a decent sized position in First Republic Bank, and then I sold that decent sized position at a massive gain. I want to be as transparent to my audience as possible. I don't want my audience to think that I'm doing all these secretive things in the background that nobody's gonna know about. Well, guess what? Here I am being more transparent than Jeremy Lefebvre, Meat Breath, and every other YouTuber. Buy my course, bro. So what is the grand reveal? How much should I buy into First Republic? Here we go, ladies and gentlemen. I'm not gonna lie, I got some bussy hands, okay? So I said, you know what? This might be an interesting speculative gamble. I'll put roughly $500 into this stock. It could completely die, or it could 10x my index in 5 seconds. I mean, there is the potential in any of these situations for some gains, even if you have to be patient. So I went ahead and I put $470 into this stock on March 20th, and I sold it for $475 basically the next day. I got bussy hands, okay? I was a little scared. But I got gains! Can all you clowns say the same thing? Probably not. But there's my transparency. Okay, let's go ahead and talk about what's going on. The most recent news. So apparently, a pretty prestigious investment analysis perpetuator, Morningstar, has lowered First Republic stock's fair value estimate to $3 as depositors flee. So this Eric Compton guy is saying that 70% of its deposits have been pulled out of the bank, which is roughly 40%. And you can quickly verify that. You can actually go on their balance sheet and see that they had total deposits of 176, and they had 70 billion flee. So let's see what that math ties out to. 40% of their deposits. Look at that. So 40% of their deposits have gone away. The bear case that he had was 30% of the deposits. Now, what he's saying is that he doesn't think that First Republic Bank is going to stay profitable. Why is that? Well, number one, banks' deposits are the lifeblood of any business, any bank. A bank needs deposits because if they don't have deposits, they can't pay their operating costs. They use deposits to buy investments, and those investments theoretically should yield more than they're paying the depositors. So yes, if you lose a ton of your deposits, which you could potentially invest into a ton of other decent investments, as long as you're not a clown like Silicon Valley Bank, you might become unprofitable because you have fixed costs. You got management, you got the accountants, those beautiful accountants, you got marketing, you got properties that you got to pay rent on. Those costs have to be covered. And if you don't have deposits, you get in trouble, okay? Now, this guy also believes that there's two possibilities. First, there's a capital infusion that'll keep it in float, okay? Which would, massively dilute the shareholders. You think if a bunch of banks come together and actually invest in First Republic, you think they're going to get a bad deal? Or you think they're going to be get a really good deal? They're going to get a really good deal on the freaking shares that they're being issued to bail out this bank, okay? Second, it can get acquired. And if we look at Credit Suisse, same thing happened. UBS got Credit Suisse for pennies on the dollar. Like, it was insane, the price that UBS was able to pay for Credit Suisse. So the same thing can happen to Silicon Valley Bank. So to me, this was just a gamble. I got bussy hands, and to be honest, I think I saved myself from losing some money. And then we go look at this most recent message from the bankers. So they say, to our valued clients, and it's very interesting what they're saying here, because they're actually not saying some stuff here, which is more concerning. The events of the past 2 weeks have been unprecedented. Our commitment is unchanged. We remain well positioned to continue managed deposit activity. Today, as every day, we are processing transactions, opening accounts, funding loans, answering questions, and serving clients' overall banking and wealth management needs. So basically what they're saying is, as of today, we're not bankrupt yet, okay? But what they didn't do is give us more details. Now, in the prior announcements, the bankers gave us, we just got 30 billion of deposits, and we have this ratio and that ratio, and we're sitting pretty well. They gave us a lot of details. Now it's simply, we're still in business, okay? Yeah. We're still in business. Yeah, okay. That's basically it. So honestly, at this point, I don't know. I mean, like I said, this has always been a massive speculative gamble. You could either lose all your money, lose a big chunk of your money, or potentially gain a lot of money. That's kind of the thing that goes on with companies like this. I mean, most of the time when a stock plummets this much, it's for a reason. Okay, this isn't just plummeting. I mean, part of it could be irrational fear, 100%. But another part of it could be legitimate. Like, there could be such insane uncertainty. There could be such insane certainty that this company may potentially go bankrupt, that the share price drop is justified, okay? Sometimes Wall Street's panics, people's panics, are not always wrong. So you keep that in mind, okay? So if you lose money on this, remember, I made $5. Yes, I risked $4.75 to make $5. I'm a genius. I got bussy hands. I was like, you know what? I'm just going to put this in VT. And I hope you guys, if you bought this, I hope you make money. But if not, prepare to be selling your butt. Talk to you later. Cheers.